Over the last 3 years, I've seen members from WallStreetBets posting huge wins from the thousands, 10,000s, 100,000s, and even millions. But I've also seen members losing thousands of dollars, obliterating their fortunes, and even being on the verge of bankruptcy. Only the most degenerate people take financial advice from WallStreetBets. Today, I'm going to do exactly that. To do so, I'll be browsing through the subreddit to find potential stocks to buy based on other members' due diligence. If their DD seems convincing enough, I'll buy the company's shares. I'll repeat this until I find 5 deserving companies to put my money into for the short term. After a few weeks, I'll review my profit or loss. But first, it's time to scroll through the subreddit to find worthy stocks. The first due diligence that I found is a SoFi short-term YOLO and earnings play. The user provided a brief DD of SoFi saying that it achieved the first profitable quarter last earnings. It is recently oversold. It has multiple investment firms valuing the stock much higher, and it is technically under the 3-month moving averages, along with 3 other retarded points. SoFi stock is around $7.20 right now. It has dropped about 25% year to date, and the stock has remained relatively flat in the past 3 years. It seems like SoFi has beat 4 out of 4 of their past quarterly earnings. Their next earnings is scheduled on 29th April, which is about 2 weeks later. So I'm going to add this stock to my watch list and buy it later. The next post I found is a DD of Intel by Dr. Imperialism, who posted this 3 days ago. He suggested that Intel is currently underbought and oversold. His DD is that Intel is catching up to Nvidia and is releasing a chip that can potentially beat Nvidia's H100. He also suggested that Congress has recently passed billions of dollars to domestic chip making efforts, and Intel will be a major beneficiary. Looking at Intel's stock right now, it has been completely decimated during 2021 and 2022, mainly due to its decreasing income and revenue. The stock has recovered considerably since then, and it's currently sitting at around $36 USD. Intel is scheduled to report its next earnings on 25 April, which is about 9 days from now. So I'm going to add the stock into my watch list and buy it later. TSM is the next DD on the list, who is posted by Parel 5 days ago. His DD basically stated TSM's increasing year-over-year revenue growth, that they are absolutely going to beat the expected EPS, and he expects a stock price jump of over 10%. TSM is basically a semiconductor company based in Taiwan, whose stock price has soared by about 225% over the past 5 years. TSM has beat 3 out of 4 of its last quarterly earnings, and its next earnings call is scheduled on the 18th of April, which is about 2 days later. It's time to add this stock on my watch list and buy it later. The fourth DD is posted by Park Life Bra 7 days ago, which is a clothing company called Guess. Guess recently had a huge earnings beat with an expected of 1.56 EPS versus a reported 2.01 EPS. They also had an expected revenue of $856 million versus a reported revenue of $891 million. Apparently, the stock has popped about 20% after earnings. Park Life's DD to buy the stock now is that the CEO announced a special dividend of $2.25 per share and a $200 million share buyback. He also suggested that the CEO announced for this to be a short squeeze because they are buying the shares back, making shorters lose money, making them in turn buy to cover their positions, then driving up the stock. The share price of Guess has peaked to about $33.40 USD and has since dropped to about $27.50 USD. I'm going to add this stock to my shortlist, but it's not going to be an earnings play. The final post is by Cyberpilot, who YOLO'd his savings into Intuitive Machines and posted a screenshot about it. His DD is that Intuitive Machines has millions of dollars in contracts with NASA, huge growth and future potential. The post suggests that the analysts set their price targets way too low, with most estimating $10 to $15. He also predicts that the share price is going to hit $40 or higher in the next few months. Intuitive Machines have surged by over 110% year to date and currently has a share price of $5. However, the stock has dipped by about 8% in the past month. This is the final stock that I'm going to buy based on WallStreetBets recommendations. I have successfully shortlisted 5 different companies based on WallStreetBets recommendations. The 5 companies are SoFi, Intel Corporation, Taiwan Semiconductor, Guess, and Intuitive Machines. Now, I'll be investing $400 to $500 into each company using a brokerage. The app that I'm currently using to buy stocks is Moomoo. If you're looking to invest in US stocks, options, or ETFs with no commission, you can download the Moomoo app. Make sure to use my referral link in the description of the video to get $35 USD in stocks for free. If you don't know how to use Moomoo, I've made a 4-minute tutorial on how you can use the app to invest in stocks, and you can watch it right after this video. I have successfully invested in the stocks of 5 different companies based on WallStreetBet recommendations. I will be back in a few weeks after each company has reported their earnings to see whether I have made a profit or a loss. I'll see you then.
3 weeks later.
It has been about 3 weeks since I last bought the stocks from WallStreetBets. Now, I'm going to be reviewing each and every stock that I've bought, whether I've made a profit or a loss, and what happened after earnings. The first stock that I've bought is SoFi. I bought 70 shares for an average price of $7.12 each and a total cost of $498. The stock rose to a high of about $8, but I did not sell because, like I mentioned earlier in this video, this is going to be an earnings play. SoFi reported their earnings on April 29, and the company beat EPS expectations by 638%. The expected EPS was 0 and the reported EPS was 0.03. They also beat revenue by 3.77%. Their expected revenue was $559 million and their reported revenue was $580 million. Despite the beat, the stock dipped more than 10% after earnings, mainly because of their poor guidance. Soon after, I sold my entire position for $7.50 each and broke even because of the fees, so I didn't make a profit or a loss. Intel was the second stock that I've bought with an average price of $36.12 per share at 13 shares for $469. They reported earnings on 25 April with an EPS beat but revenue miss. Intel also revealed a $7 billion operating loss in its foundry business and provided weak guidance for the next quarter. The stock dropped more than 10% after earnings and has dipped more since then. I'm currently at an unrealized loss of $80. The third stock that I've bought is TSM with 3 shares at an average cost of $140.52. They reported earnings on 18 April and reported an EPS beat of 4.84%. They also reported a revenue beat of 1.4%. Despite their revenue beat, the stock tumbled about 6.7% after earnings because they lowered their year-over-year projection for their semiconductor revenue by a tiny bit. The price of each share now is about $135, making me an unrealized loss of $14. I also bought 18 shares of gas with an average price of $27.47 at $494. Since then, the stock dipped by about 4.5%, making me an unrealized loss of $22. This was not an earnings play because the company already reported their earnings in March and the stock peaked at about $33 per share. Lastly, I bought 61 shares of Intuitive Machines with an average price of $5 per share at $305. Since this is not an earnings play, I sold my entire position at $5.27 per share at $321 3 days later. This made me a profit of about $13 or a 5% gain. If I haven't sold, I would neither have made a profit or a loss because each share is worth about $5 right now. So this is the total profit and loss that I've made after I've invested in the stocks that WallStreetBets recommended me to. I've invested a total of $2,187 and I've only made a gain of one stock, which is Intuitive Machines, at $13. I've made a total loss of $116. This brings my total profit and loss to a $103 loss. From this experiment, I can conclude that buying stocks from WSB was a terrible decision. I did not trade options because I didn't want to lose my money, so I bought the shares of companies instead. With any investment, you need to do your own due diligence and not rely on strangers to do it for you. This is unless you're willing to lose all of your life savings.